Hi, I'm Pattu from FreeFinCal, and this week let's review ABSL Sun Life Frontline Equity Fund. This is a large cap fund, at least for the last couple of years or so, because of its high AUM, and it has now become an official large cap fund from June 2018 due to the SEBI classification. So it was launched in August 2002. It could pick stocks from the top 200 in terms of market capitalization. It had BSE top 200 as the benchmark, but from June 2018, it was shifted to Nifty 50. It's called a Frontline Equity Fund because it defines frontline stocks as stocks which, in the opinion of its fund manager, provide superior growth opportunities in the future. It has got a weird investment mandate. It wants to try and match the sectoral diversification of the benchmark every quarter. So the sectoral diversification of the benchmark will be the same as that of the fund, but the underlying stocks will be different. I don't know why. I haven't seen that in any other scheme information document before, but that's weird. So earlier it wanted to match the sectoral diversification of BSE 200, and now it wants to do it with respect to Nifty 50 every quarter. I think it chose Nifty 50 because it realized that now its investment universe is the top 100 stocks, and therefore it feels that if by choosing the top 100 stocks and choosing a 50 stock benchmark, it can try and beat the Nifty 50. Going from BSE 200 to Nifty 50, that is trying to match the sectoral diversification of BSE 200 to Nifty 50. The performance may or may not be affected in future. So that's something that that one should keep an eye on. So let's get into the comparison of the performance comparison of the frontline equity with Nifty 50 and some of the other funds in the large cap segment. So this is a rolling return study over 15 years. So we are looking at every possible 15-year return period. So that's only about 364. So there are 364 15-year data points in each of those colored lines. Nifty 50 is the red line, which is right at the bottom, which is good. The frontline equity is the dark blue line. And HDFC top 100, which has outperformed frontline equity over 15 years, is the light brown line, and the white line is Franklin blue chip. That's pretty decent, but what you can see here is that the gap. Notice the gap. Just pause the video, or you can look at the image in the description box, the link in the description box. You can see that the gap between the blue line and the red line is fairly constant over this. Even though it's a short window, it's fairly constant, but it's kind of you can notice that for Franklin blue chip, it's kind of tapering down, and for top 100 also, or top 200 previously, it has come down just a little bit, but that doesn't matter much. The problem with the HDFC top 100, it's if you consider the rolling risk or the rolling standard deviation. So there are 363 rolling volatility data points here. So higher the line position, higher the volatility. That is volatility in monthly returns. And you can see that the HDFC top 100 has a volatility which is comparable to Nifty 50, which is kind of, I think it's a little unacceptable. I think it's got to be lower than that. But both the frontline equity and Franklin blue chip have done quite well in terms of volatility. If you repeat this calculation over 10 years, you can add a couple of more funds. The green line is SBI blue chip. It's kind of buried in there. ICICI blue chip is a young fund, so it's kind of the pink line. A little bit of segment here is that. You can also add Reliance large cap. It's kind of here. It's a light violet line that's kind of there somewhere buried into it. It's a little mess, but again you can see that the blue line, the frontline equity, is nicely well above the red line. And the other funds have also done decently well. It's not so bad. But blue chip, SBI blue chip is, it is a very short window where it has outperformed. It doesn't have a great past, and it has distant past, and it also doesn't have a great near past. So it's only a short window in the past it has outperformed. That's the problem with that fund. I have written about it. The problem is for SBI Blue Chip, the AUM suddenly became too high and too soon, and that's a problem. Again, in terms of risk, the HDFC Top 100 is the concern. Frontline equity is fine. It's got a lower risk than Nifty 50. It's not a big problem. And over 5 years also, consistently, Frontline equity has done better than Franklin Blue Chip. Of course, HDFC Top 100 has also performed, but in the recently, in the last few years, it does not. But that is not seen in the case of Frontline equity. The outperformance is more or less constant, independent of duration. That's actually a very, very good sign. Over 3 years, if you look at it, for the last couple of years or so, the performance has dipped close to or below the Nifty 50. But that's not, we can't say the fund has changed or gone down in performance, because that has happened in the past as well. So if you're an existing investor, you can wait it out and see, but of course there's no guarantee of success. That's going to change. So it's very clear that Frontline equity is one of the best performing large cap funds. We don't know how the future will pan out, because its investment universe has shrunk from 200 stocks to 100 stocks. Trying to align sector weights with Nifty 50 may or may not influence performance in a positive, I don't know, or it can be negative, we don't know that. Older investors must definitely temper expectations. They cannot expect the same kind of outperformance, it will be lower, and they must also keep an eye on performance. But as of now, I think things are good. New investors can consider this fund as a low risk alternative to the Nifty 50. However, my advice would be to, instead of choosing a large cap fund, build your portfolio around an aggressive hybrid fund. You can see past videos on aggressive hybrid fund. I'll also link 11 funds, aggressive hybrid funds that have done well in the description box. So I would suggest that that's a better option. If you are an existing investor in HDFC Top 100, I think it's time for you to quit, because there's really not much of performance. The risk is also higher. SBI Blue Chip and Franklin Blue Chip, be careful. I think you must have one foot on the door, because it's kind of, I think the performance have dipped. But so older investors, if you're happy, just continue. Don't worry too much about it. But you must be much more watchful of performance than Frontline equity if you are invested in Blue Chip and both the Blue Chip funds. If you're new investors, definitely do not touch these funds for sure. So that's it for Frontline equity. If you want any fund review, please leave a comment below. Let me know what you think about this video, and I'll catch you in another video.